We're in fiat and debt debasement times. The most valuable assets, I would say gold is valuable generally, but that doesn't mean you want to be overweighted during a financialization of everything period when leverage is being extended and asset bubbles are being inflated. Gold underperformed for a while. But what actually happens is it's kind of like a spring. The longer you hold it down and the harder you hold it down, the bigger the snapback reward is coming. So people who didn't even realize the role of gold, but realize it now, are going to get back pay, not just the upside for this era, but they're going to get back pay for all the manipulation and the held down. At the same time, they're also releasing their pressure of borrowing through the currency too. So there's a debasement trade going on. We've called the Nikkei long because of the debasement of the currency, and it's making headlines on new highs, the Nikkei. But if you divide it by gold ounces, you will find that the currency effect of the Japanese yen has been almost worse than the dollar. In fact, it is. So it might be just for everybody's 360-degree understanding, a fun drive-by on other things, because people will hear about the highs on the Nikkei and the fact that this is a major turn that's taking place in many people's views. Look at this Nikkei over here, and then I will show you how you should be viewing it. Let's just switch those two draw tools off. There's our big draw, and we've called for 74,000 on this for quite a few years. The original trigger happened in the 18. Of course, we had 2019 and COVID events in there, and then it was back to going up around about this era. So this is stocks, and this is the same fallacy that all the melt up boys on stocks get caught up with. And I'm going to show you these charts, and it's going to be very stark. This looks very bullish to anybody. And this big rounded bottom, you've got your inverted head and shoulders. We've generated a target at 74,000 there. You can see this is a log scale. If I take the log scale off, you can just see what a rip this truly is. So you can see how large a calling for a 74,000 target is and how much further there still is to go. So when I delog that, I'll put it back on the log scale just to bring some proportion to everything. But if I do the following, you'll see how it certainly spoils the bull parade view. If I divide it by gold in dollar terms, that is gold ounces, and in actual fact, we could even better still do it in gold Japanese yen. I hope I've got enough history there, and you do that. That is the truth of the Nikkei chart. Isn't that totally just from another realm different in terms of what you thought was exceedingly bullish?
Sorry, Francis, to interrupt you. I've done that with the FTSE as well, and I've got the Dow, and it all looks very bearish in terms of real money or gold.
Correct. And that's why we keep coming back to the core trade. Don't let the melt up boys excite you about the NASDAQ, the MAG 7, the SPY, the DJI, the Dow Jones, or other indexes elsewhere. We've called this long ago. This is going up, but a large part of that is currency effect. And in actual terms, the assets are debasing in real terms against gold ounces, and gold ounces are your measure. I'm going to change that to XAU USD. So even if you were an American and your currency is the dollar, you get more history because the gold, you can still see this isn't a great chart. I don't want to do that one more time. It's gone and chosen Pepperstone. We've lost a bit of the history there. I want the longer history. Sorry, FXCM. And like that, there we go. Now you'll get more history to view here. This is just showing you, this is the people that, and if you go, let's go, that's a month. Let's get a bit more duration. Let's go 3 months. You know, from 1970, you are heading down in gold ounces. Yes, you had the big 80s rush. During this period, you would have done well if you were whaling into the Japanese market then. But then once it topped, it's been a long, very brutal down ride. It's had a small rally recently, and this is very much in the territory of reversal pattern. You know, the rounded top here with the hits and that, very, very much in the territory. So my message, without having brought a gold or a silver or a platinum chart or a minor chart up, is you have married the beauty queen. I've just shown you an absolute ripper of an equity chart, and then I've shown you why it's not. Because you're not using the right basis for accounts. The key thing, Mario, is when you are in the era of hyper-stagflation, which is what I believe we are experiencing, your unit of account in terms of the dollar, and if you're in Britain, the Great British Pound, of course, is no longer a valid and useful unit of account. It's an aging old monkey on a very slippery pole who's not putting in the climbing effort to actually maintain his current elevation and ends up in the crocodile pit at the bottom. So you should cease to do measurement of assets by utilizing the dollar, the pound, or the euro. They are all debasing. We are in a debt fiat debasement era, and they are synonymous, debt and fiat. You don't have debt debasement, but no, my currency is going to be fine. They are born of each other, and they will lockstep their way geometrically perfectly to the downside. And the main reason I bring all these arguments and highlight all of this is to counter. There's a lot of influencers that say there's a shortage of treasuries, or they also make other statements like there's a massive demand for dollar and dollar denominated assets. I'm thinking of two people specifically in mind here, but there's
a milkshake crowd.
That's correct.
Well,
and
I guess it's the Cayman Island Teachers Fund that's buying 1.8 trillion.
That's right. that behemoth that needs a 1.8 trillion to be able to pay out a few grannies for their lunch money. So you can see, and you must draw your own conclusions from this. Is this manufactured Ponziism, or does it look all good here, nothing to see? If you're in the all good here, nothing to see, then I'm just a moany, whingy guy who asks awkward questions, and you should muddle on and support the dollar and the dollar fiat-based system. If you see any signs of potential conflict of interests or ne'er-do-well deeds working with primary dealers that seem to be giving a lot of leverage for people to buy assets that are not really desirable, which JP Morgan himself, Jamie Dimon, goes out and says, well, you should be looking at $10,000 gold and lots of other things, and there's a fiat and debt debasement crisis, while his same very bank is the issuer and primary dealer for the government bond market, and probably has a department that's facilitating incredible leverage for the likes of the Cayman Islands to actually buy. So, make of that what you will. To me, it smells.
Yeah, so when Francis talks about primary dealers, they're the institutions that trade deal for the Federal Reserve Bank of New York. So yeah,
they are given special license.
Yeah, and I bet the Fed is there to support them as well. So the reason Francis brought this up, I think the Cayman Island Ponzi, is because it creates artificial demand for treasuries. 1.8 trillion is a lot. So if this basis trade wasn't occurring, I would say a huge proportion of that 1.8 trillion wouldn't be there.
Correct. And wouldn't have been purchased. And then think about Luxembourg in a similar vein, Belgium, and then the city of London as well. And then recently we had both UK and France-related debt issues that were being discussed, and they suddenly became the two largest for the most recent month buyers of American debt. So you've got debt problems at home, you've levered too much, you can't meet your credit card bills, you've got some cash flow, you go and buy the other end as an asset of somebody else who's more bankrupt than you.
It doesn't make any sense. Why would they do that, Francis?
Exactly, especially when gold is running and the smart nations in the East are all stacking gold, and they look ever smarter because they've been doing it for a decade and a half, 2 decades, possibly 3 if you're China, and you keep filling